The 55th GST Council Meeting in Jaslumer on December 21, 2024, introduced important updates for taxpayers. A key change amends Schedule 3 of the CGST Act, clarifying that goods stored in special economic zones or free trade, warehousing zones before exporting or domestic clearance are not categorized as a supply. This aligns these transactions with customs provisions, simplifying compliance. Additionally, the Council clarified the taxability of vouchers. They've removed certain sections of the CGST Act, stating that vouchers are neither goods nor services. This means that vouchers distributed principal to principal are exempt from GST, while any commissions or fees in principal to agent distribution will attract GST. Services related to vouchers, like advertising and co-branding, will also be subject to GST. Importantly, unredeemed vouchers or breakage won't incur GST either. These changes aim to reduce confusion and provide much-needed relief to taxpayers. Additionally, the Council clarified the taxability of vouchers. They've removed certain sections of the CGST Act, stating that vouchers are neither goods. E-commerce operators are not required to proportionally reverse ITC under Section 17(1) or 17(2) for supplies where tax is paid under Section 9(5) of the CGST Act, 2017. Goods delivered at the supplier's premises are considered received under Section 16(2)(b) of the CGST Act, 2017, making them eligible for ITC. For the annual returns of FI 2017 to 18 to 2022 to 23, late fees for filing GSTR 9C are waived if filed on or before March 31, 2025. The annual returns of FI 2017 to 18 to Section 148A has been inserted to empower the government to implement a track-and-trace system for evasion-prone commodities. Unique identification markings will trace goods across the supply chain. Section 148A has been inserted to empower suppliers of online services, including OITR services, must record the state of the unregistered recipient on invoices. This state name will be deemed the recipient's address. The phrase plant or machinery is replaced with plant and machinery, effective retrospectively from July 1, 2017, to align with the intent of the section. The phrase plant or machinery is replaced. Pre-deposit for penalty-only appeals is reduced to 10% for filing before appellate authorities or tribunals. Section 269C is amended to define local fund and municipal fund. Interstate reverse charge mechanism transactions are explicitly included in the Input Service Distributor Framework. These changes will be effective from April 1, 2025. Are explicitly included in the Rule 16A is introduced to allow tax officers to issue temporary identification numbers to unregistered persons making payments under Rule 87(4). Rule 16A is introduced to allow composition taxpayers can now update their category in Form GST CMP 02 via Form GST Reg 14. Section 38 and Rule 60 are amended to provide a legal framework for GSTR 2B generation based on IMS actions. GSTR 3B filing is permitted only after GSTR 2B is available. No GST applies to penal charges levied by banks or NBFCs for noncompliance with loan terms. RBI-regulated payment aggregators are eligible for GST exemption. Renting of commercial properties by unregistered persons to registered persons under reverse charge mechanism is regularized retrospectively from October 10, 2024. GST rates on restaurant services are now linked to the value of supply of hotel accommodations in the previous financial year. Hotels can opt for 18% GST with ITC or 5% without ITC by declaring their preference. The Council approved procedural rules for GST appellate tribunals to be implemented after legal review. A committee will finalize measures for IGST settlement by March 2025.